Hello, good day, guys. My name is Nick, technical analyst for SuperForex. Today, we shall be looking at the technical analysis on the currency pair AUD USD. First, we'll be talking about fundamentals before we move right down ahead to technicals, which is purely what we've seen on the chart. Now, we have noticed that bears have an upper hand in the AUD USD as it stays indecisive on a daily basis due to bearish RSI divergence. A rising wedge keeps sellers hopeful as the 100 DMA adds to the downside filters and recovery remains elusive below the 0.6880 weekly high guides immediate upside. AUD USD picks up beats to pair the previous day's losses around 0.6755 to 0.260 heading into Tuesday's European session. In doing so, the Aussie pair bounces off intraday low but stays inside a 1 month old rising wedge bearish chart pattern. In addition to the rising wedge, the bearish RSI divergence also teases the AUD-USD pairs despite the pair's latest recovery. On the same line could be the consecutive bearish MACD signals published in the last week. When a high-end prices falls to gain support from the higher tops of the RSI, it is called a bearish RSI divergence and suggests the quotes downside. That said that the 0.6800 round figure and a weekly high near 0.816815 challenge the near term. AUD-USD upside ahead of stated wedge upper line close to 0.680 by the first time. Now, in a case where the Aussie bulls managed to keep the reins past 0.6880, we have seen our September's high come near 0.6915, which will be in focus. Alternatively, a pullback move could aim for the aforementioned wedge lower line near 0.6695 at the latest, and a break of which will confirm the bearish chart pattern that theoretically suggests a south run towards the mid 0.640s thereabout. Now, during the fall, top max have marked it on October near the 0.6550 and 0.6520, as well as the 100 DMA levels surrounding 0.6675, would of course act as intermediate odds for the supportive AUD-USD daily chart. Now, for the trend, we have an acclaim for the downside expected, and additional levels from an overview today. We have seen the last price to be at 0.6758, and today's daily change we have at 0.007, and the total daily change of 0.10%, of course, with a total daily open of 0.6751. So if we were to make an entry to this trade and let the trade run up to this level, we are looking at nothing less than 186 pips from the entry point, of course, which is good money. And that's our technical analysis on today's currency pair, Aussie USD. Let's move over to the stock markets right away. Hello, guys. And today's stock markets, we'll be having a look at Apple. And we have noticed that Apple's short percent of float has risen 9.70% since its last report, while the company recently reported that it has 124.72 million shares sold short, which is 0.79% of all regular shares that are available for trading based on its trading volume. Now, it would take traders 1.4 days to cover their short positions on average. Why short interest matters? Short interest is the number of shares that have been sold short but have not been recovered or closed out. Short selling, of course, is when a trader sells shares of a company they do not own with the hope that the price will fall, while traders make money from short selling if the price of the stock falls and they lose if it rises. Now, short interest is important to track because it can be an indicator of market sentiments towards a particular stock, and an increase in short interest can signal that investors have become more bearish, while a decrease in short interest can signal they have become more bullish. Now, Apple short interest graph for 6 months can show us that, as you can see from the chart above, the percentage of shares that are sold short for happiness grown since its last report. And this does not mean that the stock is going to fall in the near term, following in respect to the most recent support zones. But traders should be aware that more shares are being shorted while comparing Apple's short interest against its peers. Peer-to-peer comparison is a popular technique amongst analysts and investors for gauging how well a company is performing. Now, a company's peer is another company that has similar characteristics to it, such as its industry, its size, age, and financial structure. You can find a company's peer group by reading its 10K proxy filling, or by doing your own similarity analysis. Now, Apple's peer group for short interest as a percentage of float is 7.80%, which means the company has less short interest than most of its peers. Did you know that an increase in short interest, of course, can actually be a bullish for stock? Now, what to expect from this? We are seeing a push up to the up zone, and we are expecting it at least to get to the most recent resistance zone right after this one. We are looking at nothing less than 40 pips, and then to cover this gap, of course, we're looking at, let's say, 50 pips from that entry point, of course, which is good money. So if we're to make an entry to this trade, we're expecting 50 pips at most, and then an extension to the upside following a much more favorable news for the Apple stock. And that's our technical analysis on today's stock market Apple. I remain your host, Nick. Bye for now.